Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden agendas behind corporate filings. And let me tell you, JPMorgan Chase's latest filing is a real page turner that will make you question if your bank is actually your friend or just a clever magician. So what's the big news from JPMorgan Chase on July 15th, 2025? Well, it seems they're hosting an investor presentation to talk about their second quarter earnings for 2025. This filing is basically a heads up to the public about what's going on. Think of it as a quick update from the company to keep everyone in the loop. The filing is from JPMorgan Chase & Co., or JPM as most of us know it. This is one of the biggest banks in the world. They're reporting to the US Securities and Exchange Commission, which is like the referee for the stock market, making sure companies play fair. The date here is July 15th, 2025, which tells us when this report was filed. JPMorgan Chase is incorporated in Delaware, a popular state for businesses to set up shop. They have a commission file number, which is just a way the SEC keeps track of them, and an IRS employee identification number, essentially their tax ID. Their main office is in New York City, in that big financial district. And their main phone number, if you ever wanted to call them directly, though I doubt they're taking casual calls. Now, the juicy part of these filings is often the list of securities they've registered. This is like a menu of all the different kinds of stocks and financial products JPMorgan is offering or has guaranteed. They've got common stock, the most basic type of share in a company. If you own a piece of JPM, this is likely what you own. And it trades on the New York Stock Exchange under the ticker symbol JPM. Then we get into their preferred stocks. These are like a hybrid between stocks and bonds. They pay a fixed dividend, which is like interest, but they're still considered stock. JPM has a whole bunch of these with different names and different dividend rates. This one is for a depositary share, meaning it represents a tiny fraction of a share of preferred stock. It's the 5.75% non-cumulative preferred stock series. DD sounds complicated, but it just means it pays a steady 5.75% non-cumulative. Preferred stock series DD sounds complicated, but it just means it pays a steady 5.75% non-cumulative. Preferred stock series DD sounds complicated, but it just means it pays a steady 5.75% non-cumulative. Preferred stock series DD sounds complicated, but it just means it pays a steady 5.75% non-cumulative. Preferred stock series DD sounds complicated, but it just means it pays a steady 5.75% non-cumulative. Preferred stock series share if preferred stock's at 5% non-cumulative. Preferred stock series share. This preferred stock trades under the symbol JPMPRD on the New York Stock Exchange. They also have this other preferred stock, the 6.0% non-cumulative preferred stock series EE, trading as JPMPRC. Notice how the dividend rate just went up a bit. Here's another series GG, with a 4.75% dividend, traded as JPMPRJ. This rate is lower than the previous ones, JPMPRJ. And yet another series JJ paying 4.55% as JPMPRK. Even lower, series LL with a 4.625% dividend, you guessed it, JPMPRL. And finally, series MM with a 420% dividend, trading as JPMPRM. JPMPRM Tadits. It's interesting to see the variety of preferred stocks they offer. This diversification in their financing helps them cater to different investor needs and sometimes can be a way to raise capital at different costs. Now this is different. This is a guarantee of notes. Think of JPMorgan Chase Financial Company LLC as a subsidiary. And JPMorgan Chase & Co. is saying, don't worry, if this subsidiary can't pay back its debt, we will. These are fixed rate notes maturing in 2032. These are traded under the symbol JPM32 on the New York Stock Exchange. Here's something else quite specific. They're guaranteeing ETNs, which are exchange-traded notes tied to the Alerian MLP index due in 2044. MLPs are master limited partnerships, often related to energy infrastructure. These ETNs trade as AMJB on NCRCA. And another guarantee, this time for ETNs that track an inverse VIX strategy. The IX is the volatility index, which measures fear in the market. So these are designed to profit when the market goes down or becomes more volatile. These are due in 2045. They trade as VLD on NCRCA. TA's list shows the breadth of JPMorgan's financial products and their commitment to various debt instruments. It's a snapshot of their financial engineering tamed now. The filing also asks if they're an emerging growth company. Nope, JPMorgan Chase is way too big to be considered an emerging growth company. They've been around forever and are a global giant. Item 701 is where they disclose information under Regulation FD, which is all about making sure everyone gets the same important information at the same time. Here it says on July 15th, 2025, JPMorgan Chase held an investor presentation to review their 2025 second quarter earnings. This is standard practice for big companies after they release their financial results. They want to explain the numbers and answer questions. Exhibit 99 is mentioned as part of this. It's the actual presentation slides they used. This is where the real meat of the quarterly performance is usually explained. They're saying this information isn't officially filed in a way that makes them liable for it, which is a common disclosure they have to make. They also include a disclaimer about forward-looking statements. This is a legal protection. When companies talk about their future plans or expectations, they have to warn you that things might not work out as planned. Things like economic downturns, unexpected competition, or regulatory changes can all impact their future results. This little sentence is super important. It basically says what we tell you now might not be what actually happens later. They're being upfront that their predictions are just that. Predictions and the real world can throw curveballs. They point you to their other filings like their annual 10K and previous 10Q reports where all the detailed risks and challenges are laid out. This is where you'd find the nitty-gritty about what could go wrong. And they're not promising to update you if their future outlook changes. It's all about managing expectations legally. At Again now, let's look at item 9.01, which is about the exhibits. This section lists the actual documents attached to this report. Exhibit numbers are just labels for the supporting documents. Exhibit 99 is the JPMorgan Chase and co-earnings presentation slides for their second quarter of 2025. This is the document that would contain the actual financial tables and the story behind the numbers for that quarter. This is where you'd see how much money they made, how much they spent, and if they made a profit. Exhibit 101 refers to the report being in inline XBRL format. XBRL is a system for making financial data machine readable. It's basically a way to tag all the financial information so computers can easily pick it up and analyze it. Inline XBRL means it's embedded right into the HTML document, making it accessible. And Exhibit 104 is just the interactive part of that data file focused on the cover page itself. Finally, we have the signature section. This is where the authorized personnel sign off on the report, confirming its accuracy. Elena Korablina, the managing director and firm-wide controller, has signed this. She's essentially the top accounting person at JPMorgan Chase. Her title indicates significant responsibility for the company's financial reporting. And the date of signing is again July 15th, 2025 to so. What's the overall story here? This is a company that's very much in the business of managing money, offering all sorts of products from basic stocks to complex derivative like ETNs. They're a global financial powerhouse. The core of this filing really points us to their investor presentation where the actual second quarter 2025 earnings would be detailed. While this specific 8K filing doesn't contain the raw numbers of their financial performance, it serves as the official notification that those numbers are out and being discussed with investor presentation where the actual second quarter 2025 earnings would be detailed. While this specific 8K filing doesn't contain the raw numbers of their financial performance, it serves as the official notification that those numbers are out. And being discussed with investors, it's the cover story for a much larger financial performance. It serves as the official notification that those numbers are out and being discussed with investors. It's the cover story for a much larger financial performance. At 25 earnings would be detailed. Now for my take. JPMorgan Chase, like all major banks, operates in a heavily regulated and complex environment. Their ability to offer so many different financial products like those preferred stocks and guaranteed notes shows their sophistication and reach. The fact that they are actively presenting their earnings to investors underscores transparency, which is key in the financial world. However, the sheer variety of products also implies a complex risk profile. While the preferred stocks offer stable, albeit lower, returns, the ETNs tied to volatile markets like the VIX or MLPs carry higher potential for both gains and significant losses. The guarantees they provide on some of these products also mean they are taking on the risk if those underlying entities falter. A key risk that's always present for banks like JPM is interest rate risk and credit risk. If interest rates change unexpectedly, it can impact their borrowing costs. and the value of their investments. Similarly, if many of their customers or counterparties can't repay their loans or debts, that's a huge problem for the bank. The filing doesn't give us the specific profit numbers this time around, but the fact that they are holding an investor presentation means they are ready to stand behind those results. The broad range of securities listed hints at a strategy of attracting diverse capital and serving a wide spectrum of investment needs. My conclusion is that JPMorgan Chase is a well-established, diversified financial institution. Its strength lies in its size, global presence, and ability to innovate and offer a wide array of financial products. The filing itself is more of an announcement of their earnings discussion rather than a deep dive into the numbers. For a true understanding of their current financial health, one would need to examine the actual presentation slides, Exhibit 99, and the accompanying financial statements that they reference. The risks are inherent to the banking industry, with interest rate fluctuations and credit quality being paramount concerns alongside the specific risks associated with the more complex products like the ETNs they offer. Alright, that's our breakdown of this JPMorgan Chase 8K filing. What did you think of the variety of financial products they offer? Let us know your thoughts in the comments below. If you found this analysis helpful, please give this video a thumbs up and make sure you subscribe for more corporate decoding. And don't forget to join our Discord community. The link is in the description. We love dissecting these reports and sharing insights there. Thanks for watching, and we'll see you in the next one.